The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you have the Dow Industrials up 35. Nasdaq is down 4. S&P's up 1.5. Gold contract catching a bid up $16, $12.31 an ounce. We had silver up 31 cents, $14.59 an ounce. Light sweet crude down 20 cents, $65.10 a barrel. Notes and bonds, folks. Bottom line is that they want higher price, lower yield. Notes and bonds last week, you go up with volume. You pull back the last 2 days with light volume. Guess what? They're going topside once again. You get the 10-year up 3 ticks, 118.17, 30-year up 4, 138.07, and King Dollar. You get a major failure in King Dollar, folks. King Dollar took since August to get over its August high. Bottom line, did it on anemic volume, and guess what? You are moving back inside it with a vengeance. We've already done 20,000 contracts. We've already done 20,000 contracts out here.
We got it up. There you go. Excuse me.
If we get up, we've already done 20,000 contracts out here in the King Dollar, folks. It's down 666 ticks, 96,240. We get the euro at 113.96 to $1 US. The yen is trading at 112.69 to $1 US. Get a lot of movement out there, man.
Another day of volatility, but we're back at like even, right?
Back at even.
Looks like nothing's happening, but quite a start to the market for
Totally, and you know, you had the S&P folks up 50 points yesterday. They gave up 20 coming into the close. Same type of setup out here pre-market, but that being said, guess what? We went higher yesterday with volume. So my take is that this baby is struggling, but it still wants higher price right now. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, 11 to 12 Eastern Standard Time. Kevin, Tom, White have a great show. Fast market. You want to understand futures, options, option strategies upside down, defined risk. That's the number, folks. TFNN.com. Kevin Hinks, what's going on?
Hello, Tom. Hello, Tommy. How we guys doing? You know what this is, guys? Today is the quiet before the storm tomorrow. With Apple's earnings after the bell, Starbucks earnings after the bell, and then non-farm payrolls tomorrow. The second half of this day, I think, should be a little bit quiet before tomorrow's or the end of the day's big news.
Yeah, no, I mean, Apple basically is a leader. I mean, no matter which way you look at it, man, there's only one Apple, right?
There's only $1 trillion company, man. That's Apple. So that's not
so there's no doubt.
Tommy, you make a great point, and think about this. There's only $1 trillion company, and that $1 trillion company can still claim that they're growing.
Yes.
Which is amazing.
The services division of this company, you know, that's why this stock got another leg up, because Tim Cook can stand on the stage and tell people this company is still growing. That's amazing.
It is amazing. You folks, I mean, and you know, if you're watching Tiger TV, I got the growth numbers up here, and it's pretty amazing for $1 trillion company. In America, they're growing by 6.5%, Europe 7.5%, China 12%, the rest of Asia 10%, and Japan 5%. It's like, really? Yeah.
That's over 3 years. There's inconsistency, not just a quarter or something, man. To have those numbers over 36 months at that level, staggering.
It really is, man. I mean, let's try to grow.
And that was such a shock to the fundamentals of all people trading Apple. That wait a minute. This company's growing still. It's not, you know, all the things that they've done, all the new products that they have, you know, whether you like the products or not, people do, and people in that Apple universe, you know, they are extremely loyal.
Who doesn't like those products?
They are extremely loyal.
Don't bring them around here, kid. No, I'm just kidding.
No, there's no doubt.
They got a cult following, man. It's the fanboys, right? I mean, it is. You really love it,
and with good reason too.
Oh, for sure.
Do you know what I mean?
I'm almost borderline. I mean, I give my friends, some of my friends, I call them fanboys, you know, because they love everything about them. I'm pretty close, man. I love my iPhone. I have an iPad. I'd love to get maybe an iBook or something. They just announced those products a couple days ago. It looked pretty cool. I guess the Air is they really ramped it up. So they're always innovating, which is pretty cool.
You know, Kevin, you know what's amazing? That the pricing structure that they can get too. I was hearing the iPad that you're talking about.
Yes.
They have iPads now that are $1,800.
Oh, for sure, man.
It's like, really? Yeah. To watch TV, you know.
It is.
But I get it.
And they've always been on the high end. That's where they get, you know, in terms of price. That's where Microsoft is.
Yeah. So.
Of course, that 1,800 iPad can probably backdoor the Pentagon if they needed to, but nevertheless, they give you a beginner and they give you an extremely powerful, and as whatever you need, they have a product for your needs.
Yeah, and when they went down on their prices on the lower end phone, we'll find out today, I think, you know, how many that they pushed out, but I can picture pushing out some. Because
it's pretty good when they go down. And what is the lowest level now?
It's still probably 500 or something.
At least. No, I'd say like 7 or something silly.
Really?
Yeah, I don't even know. That's the shame. I don't even know what their cheapest one is because I have
because you have the most expensive one.
No, I have an 8 Plus, 9. Yeah, I don't have the 10 yet. I don't have the X. We'll get there.
You gotta love it.
Yeah.
So Kevin. You know, as we're talking, Kevin, it's a beautiful thing. When you first came on, the S&Ps are up 2. Now we're up 13.
Yep.
You know, and what's so interesting here, folks, is that pre-market out here, you were up good. You pulled back. You know, my take, this is what makes good bounces happen, though. You know, it's the market's deviant, but guess what? We're on a Thursday. You're coming into Friday. You're coming into Apple. You're at the beginning of the month. You know, we'll see how far this can go, but I think we get a little action here.
Tom, when I came on the air, the NASDAQ was down. It's up 18 now.
There you go.
Who knows where it'll be by the time you go on the air, Kevin, at 11 a.m. Eastern time.
Yeah.
Yeah, I mean, it's just, you know, it's amazing. You know, we like to keep people up on the futures as they're moving during the show, but we have to now because they're moving so much.
Yes.
This is a perfect example. Within 5 minutes, we just moved 0.5% in index.
Well, you know, there's no doubt. And Kevin, you know what has been amazing, right? You know, some of the calls that have come in, you know, in the afternoon, I've realized there are a lot of people in this market, you know, that never seen a two-way market. I mean, because if they've been in the market almost 10 years, it's been a one-way market, except for, 1 or 2 months? So it's pretty cool, you know, what everyone's going to learn in a market like this now.
Yeah.
You know?
Exactly right. And, you know, I've been through a couple of these where it's two-sided trading, and you know, rallies should be sold and sellouts should be bought, and you're seeing it right in front of us as we're on the air here.
Right.
But a lot of people, you're exactly right, Tom. A lot of people are uncomfortable with these markets, and that's okay. You know, I would tell them if they ask me, get used to it.
Yeah, well, you know what I'm digging? I think it's going to be a monster consolidation. And guess what? If it's a 4,000-point consolidation, man, for a year, great. Folks, you'll have a field day. You listen to Kevin, listen to Tom. I'm telling you, you'll have a field day. Because what ends up happening is that you don't have to get the top. You don't have to get the bottom. All you need is the middle. That's all you need. Yeah. You know?
Right. Tom, we say it every day. Bullish is a strategy. Bearish is a strategy. Range bound is a strategy, too.
Totally.
And we could be easily going into one of those markets.
Yeah. And folks, right here, 45 minutes from now, outstanding show. Of course, they're gonna be talking Apple, of course. Okay, it's a beautiful thing. Kevin, you have a great one, safe one. Have a great weekend, man. Look forward to speaking on Tuesday.
Always a pleasure, guys. Thanks.
Thanks, Kevin.
Thanks. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow Industrials up 130. You get the Nasdaq up 23. S&P's up 10. Let's go to our man Paul in Henderson, Nevada. What's going on, brother?
What's happening, gentlemen? Happy November.
Happy November,
man.
November 1st. It's a beautiful thing.
Brand new month.
Yeah.
I can't believe it. It's been almost 4 years now since I've been growling and prowling with you guys,
Wow.
and
Amazing,
learned
man.
a tremendous amount, and I appreciate everything that you guys do, man.
Well, we
That's so
appreciate
awesome,
all
man.
the support, man.
Thank you.
So 4 years. Man, 4 years goes quick, doesn't it, Paul?
It goes by way too fast. I'll
Way
tell
too
you that.
fast. Agreed.
It's so true,
Completely.
man. It's so true.
Completely.
It's unbelievable,
It is.
Hey, so Tom, I'm taking a look at W, and I really like this setup this morning for a quick trade out the gate. This thing gapped below this 200, and then what I liked most about it is it was going right into this big gap back in March, I believe.
Okay. Let's take a
So
look
once
at
it
it.
failed that level, I hit it. But what I'm curious about is, what do you think about this thing? Do you think this thing could fill the gap? Because I took 3/4 off, but I'm looking to hammer it again if we get below 90. Kind of curious on how you would look at this.
So let's take a look. This is Wayfair, folks. The low is 55. The high is 151. I didn't realize it's headquartered in Boston.
I didn't either, yeah.
That's pretty intense.
Everything's out of Boston,
I'm
baby.
telling you, man. They got a lot, no doubt.
They do.
Okay, so, I see.
Quite a
So,
haircut in the last couple months.
Yeah, so you broke the swing. You got it. Well, you got an ABC down. So on the long term, you got, 126. You get $27, which is going to get you basically down to what, about the 90. Oh, hold it 1 second. Well, 90, 100, well, 80. Yeah, so it's just finished an ABC down. Let me see this. So are you trying to go long intraday just for a bounce? Is that what you're doing?
No, I went short right at once it got into the gap. There's that huge gap if you pull it back a little bit that it gapped into, and then it gave it up this morning. So at about 95.50.
I see it. Okay, right there. Yeah. Okay.
Is where I took it short. I took 3/4 off. I have a quarter position on right now, but I'm curious if I could add to it.
No, don't add to it. Don't add to it. This got monster volume, but you know you have, you know, This will hang out here. This is a huge amount of energy, Paul, just on a spike down. Do you know what I mean? You'll get a couple counter turn bounces out of this.
Can we pull up their earnings out of curiosity? I'm sure they weren't too great.
Right.
Quite a number, man. And it's really remarkable. It's the slide that it had in the last couple months leading up to this, too.
Yeah, I mean...
Look at that earnings, though. They beat 128 versus 109. I mean, a lot more going on, obviously. I'm just highlighting where's their forecast for the future that's obviously probably abysmal.
Yeah, so the revenue is they expected 1.7, they did 1.7, 1.6, they did 1.7.
Sorry, the problem was they had 128 loss versus a consensus 109 loss. That was the problem. I was thinking they had beat on earnings. They beat as in they lost more than they thought.
Yeah. What I would do, Pierre Paul, well, it looks to me, I mean, when you're trading something like this, you could put a buy to close in, and hope to get another spike down to that like 90-80 area. 90-60 was the last one, because it looks like this bar is not going to hold right now. Do you know what I'm saying?
Right.
We had 369,000 on the first bar. Right now you're only 2 minutes into this, but it looks like it's going to fail. 90-60 is the number. Yeah, no, 93.05 is the top of it. If you close at 93.05 in another 8 minutes, then I'd say put that buy to close in on the other side, because more than likely you'll see it get down on the other side. And then basically, I guess you could go back and forth, but I'd kind of leave it alone, because I think that'll bounce a little before the end of the day. Nothing heavy, but on a longer term basis, it wants lower price. But, intraday, you get some action here, man.
Hey, do you guys have a quick second to take a look at spot?
Yeah, here. What? Can you just stay with us? Stay with us for a second.
Absolutely.
And we're going to pull up natural gas too. So, right?
Sure.
We can do that. Just stay right. Stay right there. We get natural gas coming out at 9:30, folks. 10:30. So we want to see how this baby's setting up, since we're coming into the winter time out here.
So we have natural gas at 328 right now. I'm just jumping around here. Taking a look at some of the contracts. Now, the contracts are going to line up with about 330, so you're two pennies away, which is going to be a little bit much, in terms of having to pay for that intrinsic value, where each of these trades is going to take on a bearish bias, because when you're buying both of these, you go from 330 to 310, 330 to 350, and you're sitting at under 328. So the bearish spread, alone is going to cost you like $29, which is a lot of money.
Yeah.
Not a lot of money if you want to trade bearishly.
Right.
But if you're just trading straight volatility, you get a 2-cent pop to the upside, which is not bad, and you're at your max loss position.
Right.
So that's how all these positions are going to line up today.
Oh, interesting.
Yeah,
right.
I went through, whether it's the 11 a.m. expirations, the noon, each of the 230s, just jumping across, you'll see each spread has a 330 price, which again is not bad. You're only talking about 2 cents, but you really just want to be aware. And as we're speaking, it's continuing to trade lower. It's the 329 when we started taking a look at 10.15. We're now an extra penny and a half. So you're 2.5 pennies away from where these spreads kind of have a pivot point. So it just takes on a little bit of that bearish bias,
And it's interesting because, oil took a hit yesterday. We're coming into the winter, but guess what? We evidently have plenty of energy out here.
Yeah,
so,
yeah. You got crude oil sitting right at $65. Quite a number. Yeah.
So let's see. What else do you like to look at, Paul? Oh.
We have him there, maybe?
Hello?
There he is. Paul?
Okay. Yeah. Can you guys hear me?
Yes, we got you. What else do you want to look at?
If you guys have a second, I would like to take a look at Spotify.
Oh, Spotify, yeah.
I don't know. I think they came out with earnings yesterday. They're gapping down.
Yeah.
But it's way down here close to the IPO price, and I'm thinking perhaps a bounce today later.
So they came out with the earnings at 6:30 this morning.
Look at this, man. So, in the last 3 months, we just went from, 198 to 133. Okay, if I take this... Oh, I see what's going on. Oh, man, this is crazy, because look at that. Look at that. What is that price there? 135. Yeah, you get action, Paul. Yeah, this came back. What I do, if you're going to day trade this, right, you got to get it a little bit lower, because you can see these bars here, see? Okay, at 10 o'clock you had 568,000. You went to a higher high with 300. Right now you're only doing 132. When you see that, normally I would wait to get back down, just have some patience. It gets back down to the 134, then be all over it. because you probably just have 3 or 4 points, you know, inside of that you can basically trade.
Yeah, these two they're great for day trading. They have a lot of range, spot and W.
Yes.
You don't need very many shares. You could
exactly.
have a good
which
start
is
to the month.
I know. And when you get a downdraft like that, too, you're gonna get a play of 2 or 3 points, which is pretty cool. Do you know what I mean? But now, where I'm going also is I think we're going to have an up day today, all day long, and that's going to help you, you know, doing this. Okay, if we were in a down market, I'd be never telling you to day trade these. If you were, I'd tell you go on the other side of it. Do you know what I mean? But
right on. Hey, I appreciate it, gentlemen. Have a great day.
Cooking, brother.
Paul, thanks for calling, man. Have a great one.
Have a great one. Happy anniversary.
That's right, 4 years. Thanks so much,
4
man.
4 years, man. Bye-bye.
Bye.
Stay right there, folks. Tommy and I come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas.
There's the number in red, rising 48 billion cubic feet. Estimate was median estimate analysts, 53, Bloomberg survey 51, so a little bit less natural gas. And that means less supply, higher prices, and you get a jump of about a penny. So this is kind of what we were alluding to, right? I mean, you do get a jump of a penny, but when you have directional bias in your trade, 330 is your max loss position. So it's not a straight volatility trade, you know, and you just want to be aware. You can can still make that volatility trade, but you have to understand that you have a bearish bias in that because you get a 2-penny pop to the upside and your max loss. You get 2 pennies to the downside and you have a great profit.
Right.
So it really takes on a different dynamic, and nothing too surprising in that number, but a penny to the upside so far, and we'll see where we are. I mean, Aiden this morning, you know, we've been jumping around 4 or 5 pennies, so that's nothing too dramatic so far. Yeah.
So let's go over, folks. What we have out here, you know, you get a major failure in the dollar.
Quite a move, man. We're at 766 ticks right now.
Right, and you know, if you have my book, The Art of Time in the Trade, folks, bottom line, this is absolutely a classic. It's like pretty crazy, actually, because what you're going to see here is that, you know, you were pushing into the high, and it had volume pushing into the high, so I wanted to take it out. You know, we had 28,000 contracts, 28,000, 28,000, and then when it took it out with 16,000. It's like, man, this is crazy. Now, what you have here, now we're already back inside it with 20,000. That being said, so now my take is that, guess what? You know, you can't bust them up. Okay, the next deal here is now 93,405. It's going to see if it can bust them down.
And what was that previous high? Just out of curiosity.
96,450.
Okay.
And intraday, this is what you have intraday. The gold is doing an intraday ABC structure on the way up. The dollar index is doing one on the way down. We just broke again with volume. You know, if we go over to the gold market now, what you're going to see is that intraday here, this baby took out a, let me get this closer. We took out a B point. It has the volume behind the move. Here it is right here. So if we bring this back, you're going to see the A point on this is 1218, approximately, yeah, 1218. Your B point is up there at 1228, so you get 10 bucks. Your C point is 1224. Oh, there you go. We get 1234. We just hit it. So what we had done is that we had good volume at 8 o'clock in the morning.
Yes.
We had another acceleration at 8:20. And bottom line is that we get action out here. You know, it's quite a reversal, though. There's no. You know what's so crazy is that, you know, double tops, bottoms, and all that. It's, you know, it didn't have the juice with conviction going into it, but it's always crazy when it actually works.
Yeah,
you know,
quite a move on gold, $20. I mean, I guess, but you have the dollar down almost a full point, which is crazy.
Right,
730 ticks. Yeah.
Right, and now if we go over to the bond market, now this is what's going to really be wild too, folks. If we look at the bond market, it looks to me that the bond market is setting an ABC structure on the way up, and if that's what we have, it's going to be pretty intense. And where I'm going there is that, you know, we came off the lows of 117.13. You had volume. We get volume at the last swing high of last week. That volume was 2.7 million. Yesterday we come down with 1.9. 1.9 was going into 2.9. It's like, okay, man.
Yeah.
You know, that's a classic. You know, it very well could be. And if that's the case, it looks to me that, you know, the S&P is setting up this B to C of an ABC down. And now what would happen is here, this is what's really cool. So inside the indices, we got volume yesterday. Now, we didn't get volume inside the ETF structures. So if, in fact, we keep going higher and you see a contraction, that's where your probability is going to be much higher that, guess what, this downdraft's not over, you know. So we got window dressing out here today, you know, next couple of days. If we stay up today, folks, the probability is pretty good that you're going to stay up tomorrow.
Well, we'll see what happens with Apple. We'll see what happens with non-farm payrolls.
Right.
Just that, as Kevin was saying, there's a lot just between Apple and the payrolls, man. That is. Oh,
it's a big one.
You get the biggest company in the world reporting their earnings.
Right.
And you have payroll numbers, which is one of the biggest movers on a monthly basis.
Right. And what had happened with Apple, just, you know, in this downdraft, folks, Apple actually went into a high volume bar and rejected it. That was a 208. You know, we got a weekly basis here.
Yes.
So that week had 228 million, and let's see, that I can't do this one because that's this week. Well, actually, I can.
We're almost there. It's Friday.
Yeah, that's right. Because it went down to 206. You're at 130.
And it dipped
versus
below
225.
I was just going to say, I think it dipped below that $1 trillion mark, which I think for Apple pegs at about 207.
Okay.
And change. And that's why that big bar, if people recall.
206.09, yeah.
Yeah, and that's what the big one going back. Remember, where you were, it floored right through 207 when he made that jump. Yeah.
So, you know, the way that that's set up it would be saying that after the close out here, Apple doesn't have a high volume high, but that is saying it did reject the low. So probability-wise, it's going to come in with some decent numbers.
Yeah.
You know.
Yeah.
The jobs, well, the growth number, now this, what had happened is that our markets, the currency markets were moving before the production number come in. I mean, the gross domestic product number come in. Because that was light,
Yes.
right? You know what I mean? It's 2 point something.
2.2%?
Yeah.
Was that,
I mean,
was that GDP? What did that, I don't think that was GDP.
Oh, it wasn't?
No.
Okay, let's see. What was it? Where are you?
Maybe
US
that.
growth slowdown.
Yeah.
Oh, the manufacturing, yeah, ISM. Okay.
Yeah.
So that, yeah, this is manufacturing. So bottom line is that.
And then that's, you know, what's been moving the market as well in terms of Trump talking that he had spoke with Xi, and that they're going nicely, whether there's any credibility to that mattering. But that is some of the bump, I think, that we got from when we first came on the program.
Right.
S&Ps, when we started talking to Kevin, what were they up? 2 points? Now it was up like 30 or 40, and I was saying it looks like a flat market. You wouldn't know the volatility we've been getting. And by the end of the hour, the S&Ps are going to be up 20, Dow's going to be up 250, Nasdaq's up 57 right now.
Seriously, because look at it. I'll
10
put
o'clock
it,
on the
right
dot,
there.
yeah.
So we went from 27.07.
Yeah.
And 10 points.
Yeah.
10 points ASAP, and now you're taking out the 27 number,
Right.
and you get some juice behind the move. So
Oh, yeah. I mean, S&Ps are up 0.75% since we came on the air. That's a big number, man.
you gotta love it.
It's becoming the norm in the last couple of weeks, but that's a big number.
Right. So let's go take a look at the VIX and see where we're hanging out here.
20 what? 2066. I was guessing.
It's not backing off.
No.
That's you
No.
know that's
Not for the last 3 days in terms of we're now. I think what was it? 3 days ago, as in going back to Tuesday, that was up like 400. That was up like 200 yesterday. It's up 200 today. We still have the VIX sitting at 20 plus.
Right.
Yeah.
Right. Insurance is still costing money, folks. That's how this is shaking out. Let's go take a look at some of the higher volume equities out here.
Just to finish that, as you pull it up, the elections. I mean, it's Thursday. Elections are Tuesday.
I know.
think you're going to see the VIX stay elevated.
Yeah, that
And Kevin
makes
had
sense.
mentioned that, and you know, you're not going to see the VIX go down to 13 on Monday, the day before we potentially reverse course in terms of who controls the House and the Senate.
Right.
So that's something that rightfully, and who knows, it could be underpriced for the VIX in terms of what could potentially happen if you see Democrats take control of the House or the Senate, or if you see Republicans stave off the talk, you know, and just completely
and how the market how people react to it in the market wise.
Yes.
I mean, that's you know, there's no doubt.
Yes.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 190. Nasdaq is up 51. S&P's up 17. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials up 160, Nasdaq is up 45, S&Ps are up 15. And let's just take a look at some of the high volume stocks first. And we'll take a look at Fitbit, because Fitbit bottom line went from a loss to a profit. They were expecting a 1 cent loss, and they went to a profit.
And look at that, man. They're the third most actively traded stock out there.
Let's bring it up right now. So
okay.
let's take a look at it. So we got, let's see.
So they reported their earnings. They ended up making 4 pennies a share, right? They were estimate to lose a penny a share.
Right.
And we're only talking about a $1.4 billion company, okay? Pretty tiny. Their revenue coming in at $394 versus $381. So again, pretty tiny company.
Right.
But when you're only supposed to take in $380 million, 15 extra million, that's a small company. And 15 extra million is a lot of money, especially like you were saying during the break. That's pretty close to their break even, 380. As in, obviously, if they just oscillated around from a 1 cent loss, if they had taken in 381, to they're making 4 pennies at 394, they're right flirting with that area where, as long as a company can be making money, it doesn't matter how small you are, you'll be in business, in terms of, now, with that said, we're also saying, I don't know how they compete. What are their products in terms of, because if I'm thinking about buying something, I might buy an iWatch, or, or it's just, they're in a tough sector, man, let alone Google's got their devices, everything you can.
Sure.
Yeah.
And, you talk about, this went IPO, folks, at $20, June 17th of 2015. Then they did a secondary. Imagine people buying the secondary, $29 in November.
And that's at the time that they were rocking and rolling.
And the stock went to $50. So this is like a disaster, in the context for plenty of people.
I had a Fitbit early on. I want to say it was like 2013, 2012, when they were just starting to come out with, and that just had very limited capabilities in terms of what things can do today. But they were on the forefront. Problem is, they're in a sector that is just, you want to compete with Google and Apple and Microsoft.
It's a one-trick pony.
Right, exactly.
Yeah. Let's go out, man, Mark in Bedford, Massachusetts. What's going on, brother?
Not much. How are you guys doing today?
Good morning,
Good,
Mark.
man. Yourself?
Doing well, man.
Surviving the rain up here. Great day yesterday.
Rain, okay.
Well, rain's better than snow, I think.
You beat me to it.
Yeah.
That is
it's
true.
November,
that
man, so stay, hopefully not too bad.
Listen, I had a question for you, Tom. What are the odds of this not being a bounce, but being just another leg up?
Well, I don't know what the exact odds would be.
He wants it to the penny now.
When you
slim, non-existent. Maybe not.
Oh no! Listen, I
wouldn't say non-existent.
Yeah,
right?
the way that I'm looking at this, and I'm telling you, folks, you want to wrap your head around this market, because my take on this here, I'll make this a much bigger thing. I think we're going to be in a consolidation for a year, and there's nothing wrong with that. So picture, if we go to 2014, 2015, right? Bottom line is that you see consolidation started like somewhere around December of 2014. We went all the way over to almost September of 2016. You know, that was after a nice leg up in the marketplace. We got another nice leg up in the marketplace. And this is a 4,000 point range. And, you know, that would make sense. You know, because when you look at the economy's moving, man. I don't care who gets elected next week. It's just not going to stop. The economy's not going to stop.
Definitely.
So my take is that, yeah, the economy goes forward. What has to stop, though, is that, like, I think IBM way overpaid for Red Hat. I think that's going to get toasted. So, you know, when you're a fundamentalist, it's like, okay, what are you paying for a company? Well, the company's got to catch up with this deal, you know? And over time, I guess they will. So that's where I'm kind of at, you know, at this particular point, you know? So I think there's a huge amount of opportunity, and we're going to know if I'm right when we come back down to that S&P number, because if it comes down there with too much volume, it's going to be a problem in paradise. That means that we'll take.
Well, here's the point of the question: what happens if we don't even come back down? What happens if we just say, let's say the numbers tomorrow from the jobs report are good, everyone likes them, and we just say, okay, another round of buying, and we just go forward. We buy Monday, we buy Tuesday, we buy Wednesday, and forget coming back down. That's what I'm wondering.
Sure. Well, it will take quite a bit of buying to repair the damage on the way down, because the amount of money lost is pretty incredible, you know. So, you know, the real question is, you know, we'll find out. I mean, if you're up on light volume, you know how my take goes, but we're going back down, you know, bottom line. You know, so damage-wise, this market's damaged right now. Here, I'll show you the SPY. You know, when markets gets damaged, folks, they do get repaired. Okay, it's a time deal though. You know, when you take a look, I mean, look at this thing. This is sticking out like a sore thumb. I mean, we take a look. I just put this up on a monthly basis. On a monthly basis, you get a break with conviction, man. I mean, you just look at this bar. It's like, you know, they're bailing out, man.
Yeah.
You know. And what you do have here, this is where the dangerous part is it. We came down on 3.3 billion, right? And the high volume low that I'm talking about is 2.9. So now what you haven't, you know, you get volume down at the lows.
Yeah,
so.
Pretty amazing. You did more volume than February.
It is. It is.
What happened in that month? Yeah.
It's pretty intense, and that's the first time I actually saw that.
Yeah.
If we put this,
that's because today's the first day after the end of the month.
Yeah,
there
totally.
we go.
And, oh, look at the Nasdaq. Forget it, man. We're going south, man. Look at this Nasdaq. This is like about.
Looking at the Qs.
Yeah.
Yeah.
You know. You look at the Qs, man. This is like, you talk about a break with conviction, man. Holy cow.
Yeah.
You got 1.8 billion coming off the high. Now, you've been around long enough, Mark. You know that if you have volume off a high, what happens is that most times your correction is going to be further than it normally is, because the funds got out. They're not buying when they come back down for support.
That's true, but we'll see what Apple does this afternoon.
Yeah, Apple. We'll see what happens.
No, Apple's going to go up. But Apple's going to go up.
Nasdaq.
Apple's going to go up. I mean, or it goes flat. But Apple's not, you know, Apple can't save the market, man. Apple can save the market for a couple of days. Yeah. And it's not a big deal.
All right, well, I wanted your 3 cents on that. So how's the weather down there in Florida?
It's gorgeous.
It is beautiful. It's a little bit cool today. It's going to be like 81 degrees in the middle of the day.
So did you guys watch any of the recap of the parade?
I did get some video highlights of the parade.
Was it good?
It looked good. Hey, I was jealous. Friends.
Well, I was working, but you know, I saw the recaps on TV. They say that some of the people were 10, 12 deep, you know, and
oh yeah,
that's beautiful.
It's phenomenal. And now they're talking about, well, we're going to have what are we going to do for the Patriot Parade?
That's right.
I always say, well, we got to get there yet. So.
No, I know the numbers, folks. If you're from New England, right, and you're like Tommy's age, you don't even know what it is to lose.
Well, I gotta be fair. So I'm 38 right now. They started the run at because when I was you know, growing up, I mean I remember when the Red Sox lost in '86. Even I was 6 years old. But then the Patriots were abysmal. That's where we get most of our credit. I mean they were going like 2-14 for a while there. They did make the Super Bowl. It really started, but I have a good age. My 20s and my 30s, man, we're on a 20-year run. I mean, they started, I don't know what year Brady came in for Bledsoe. so, but that's when it all started. And
Yeah,
it was
Brady
about
cannot play
2001
forever.
that they.
Brady cannot play forever, so
yeah.
we'll see.
That's right.
Hey guys, cooking.
Well,
Take care.
we're gonna get that's Mahomes. What's his name?
Yeah, Mahomes
That's
for
what we
Kansas
need.
City. You want
Yeah.
him? You're ditching Brady already?
Well,
Brady's
no.
our quarterback.
I know that, but after Brady.
Oh, okay.
Stay right there, folks.
Thanks,
hey, Mark,
Mark.
have a great one, man. We're coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 183, Nasdaq up 57, S&P's up 19, gold up $19.60. King dollar's getting smoked. That's down 776 at 96,125. And folks, if you haven't test driven yet the gold report, bottom line, well, even if you have test driven it, because we got a new website.
That's right.
You can check out the gold report at TFNN under featured content. And what you're going to actually see is that the quantitative edge, the opening call, and the gold report just happen to be there. And all three of them, #1 are great newsletters, but all three of them also have a webinar that, I did a webinar about 2 weeks ago. Basil did one Tuesday night. Jason did one last Thursday.
Yeah. So you get immediate access to those archives and just great newsletters as well. You can always check out all the newsletters on the newsletter tab right up here. But just so happens the three of you guys did workshops in the last couple of weeks. You gain access to those right there. And great time to check it out. Jason's newsletter coming out Monday morning weekly. He puts out updates as well. Your main newsletter coming out weekly. Larry's Fibonacci 24/7 coming out weekly. Always a great time to sign up in terms of get ready for those Monday action.
Monday action.
Monday action.
New month. We're in November. Pretty amazing. Thanksgiving's going to be here before we know it.
Oh, boy.
Yeah, get that gobble, gobble, gobble.
That's right.
Get that turkey going.
Get the stuffing ready.
And, you know, so what you have out here today, I expect, folks, this market's still going to, you know, go higher. The volume is anemic, you know, so, you know, we're setting up a B2C and ABC structure on the way down. If we go over to look at the small caps for a second, small caps still are the weakest out here. Now, it's going to be really cool today because the IWM has got over the highs of yesterday. So now we're going to see, do we get a contraction of volume or not?
Yes.
You know, we did 36 million yesterday, and that was we had good volume yesterday, folks, and that's why I'm thinking we're going to have some follow through. But this is where the contraction starts.
Apple earnings tonight.
At 4:30.
We'll find out. You'll be on the air.
Absolutely. Stay right there, folks. We got Fast Market coming up next, and then we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Will be back this afternoon. Thanks, Bill.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.